Welcome to the deep dive. Today we're really jumping into a pretty significant strategic pivot happening right now in the blockchain world.
Yeah, big one.
From a major player, Polygon. You've almost certainly heard of them. We've been looking through a whole stack of sources on this, and basically our mission today is to unpack the why. Why this big decision?
What does it mean for them, for Polygon?
Exactly. And crucially, what it means for you, for the wider crypto ecosystem, and the really striking detail, the hook from our research.
Go on.
Polygon is phasing out its Polygon zkEVM chain completely by 2026.
Right.
I mean, this isn't just a small adjustment, is it? We're talking about walking away from something they bought for, what, a staggering $250 million back in 2021?
That's the figure. And apparently it's been losing over $1 million every year since.
Wow. Okay, yeah, let's unpack that.
It sounds pretty drastic on the surface, definitely. But it really does highlight how dynamic this whole blockchain space is. Innovation is constant,
You have to adapt.
or get left behind. Yeah, sometimes that means cutting your losses,
Yeah.
even on a really big investment if it's just not working out. So we'll get into the specific shifts they're making, the strategy behind it.
Okay, so the core news here is about this zero-knowledge Ethereum Virtual Machine, the zkEVM. Why? What specifically led them to say, okay, by 2026, this is done, especially after spending that, $250 million on Hermes just a few years back to get it?
Well, the sources we looked at are pretty consistent on this. Basically, the chain, the zkEVM chain, it's been largely inactive. Just not much happening on it since they
Inactive, okay.
And maybe more importantly, technically, it never got upgraded to support blobs.
Ah, the EIP 48 over 44 blobs on Ethereum.
Right, exactly. Which are pretty vital now for layer 2 scaling, for bringing down transaction costs. So it kind of missed a key technical step.
So technically falling behind.
Right. And then there's the financial side. As you said, a consistent drain, losing over $1 million a year.
That's not sustainable, even for Polygon.
Not really. And the sources mentioned development was, the phrase used was quietly abandoned.
Oof, quietly abandoned.
Yeah. So the fact that they're willing to just, write off such a huge initial investment, it says a lot, I think, about that sort of fail fast idea in crypto.
Even for the big players.
Especially for the big players, maybe.
Mm-hmm.
It suggests that if you don't find that market fit, or, the clear utility isn't there, and the costs keep piling up, even well-funded projects can get shelved.
Okay, so if they're sunsetting this $250 million project, what are they focusing on instead? Where's the energy going now? What's the new direction?
It seems like a very clear strategic shift. They're focusing on two main pillars now.
Okay.
First, their existing proof-of-stake chain, the POS sidechain. That's getting a renewed focus.
The one most people know as Polygon, probably?
That's the one.
Yeah.
And the new focus there is going to be heavily on stablecoin payments and tokenized real-world assets, RWAs.
Interesting. So specific use cases.
Very specific. And they have this Giga's roadmap for it, which is apparently already live on the testnet. Mainnet launch is expected early July.
And Gigas is about speed, capacity?
Yeah, boosting capacity significantly. They're aiming for something like 1,000 transactions per second.
Okay, so beefing up the POS chain for payments and RWAs, what's the second pillar?
The second pillar is AggLayer. That's their cross-chain infrastructure layer.
Right, the aggregation layer.
Exactly. They're positioning this as a trustless system for cross-chain settlements, so making it easier and safer for different chains to interact.
Trustless, meaning no central intermediary, relying on the tech itself.
Precisely. Using cryptographic proofs.
Yeah.
And version 0.3 of AggLayer is actually set to launch very soon. June 30th is the date mentioned.
Okay.
And that's supposed to bring better features for, interoperability, better user experience when moving between chains connected to it.
So POS for specific high-value use cases, AggLayer for connecting everything seamlessly.
That seems to be the strategy. It feels like a move towards maybe a more mature phase, moving away from just general purpose chains towards more specialized solutions where blockchain can offer, real immediate value, stablecoins, RWAs, interoperability. These are big narratives right now.
Yeah, it could be a sign of where other layer 2s might head to, maybe, focusing in.
It's possible. Find your niche, excel at it.
Now, this sounds like a big shift technologically, but also organizationally, right? We saw news about leadership changes. Sandeep Nailwal, the co-founder, is now CEO of the Polygon Foundation.
Yes, that's a key part of this whole pivot.
What's the thinking there? What does that signify?
Well, it seems to signal a move away from Polygon's, let's say, previously more decentralized or perhaps fragmented governance model.
Towards something more centralized?
Towards something more centralized, exactly. At least at the foundation level. Nailwal himself basically said it's necessary for clearer direction and better execution.
Which you might need when making such big, decisive changes.
Absolutely. It's important to note, though, Polygon Labs, which is the core development arm, that's still operating independently. Mark Boyron is still CEO there.
Okay, so Labs is separate. Foundation gets more centralized leadership under Sandeep.
Right. And this, it brings up a really interesting point about the whole blockchain industry, doesn't it?
Yeah.
This tension between decentralization ideals and the practical need sometimes for more centralized leadership to be agile, to make tough calls quickly.
Especially during growth or, like here, a major pivot.
Exactly.
Yeah.
You often trade off that broad community consensus for speed and hopefully efficiency.
So stronger leadership may be better equipped to handle these big financial moves and strategic shifts. On the financial side, despite writing off the zkEVM loss, how are they actually doing? Are they okay?
It seems so, yes. Their financial health looks pretty robust, actually.
Okay.
The organization has stated publicly they have a strong position. The Treasury holds hundreds of millions in cash.
Hundreds of millions. That's a serious cushion.
It is. And that reserve is specifically earmarked to support future product development, like focusing on POS and AggLayer, and significantly, it limits their need to go out and raise more money from external sources.
So they have the runway, the freedom to execute this new strategy without VCs breathing down their necks.
That seems to be the case,
Hmm.
which is, a pretty good position to be in, especially in this market.
Definitely. Now, one question that might pop into listeners' minds, with the zkEVM being sunsetted, does this mean Polygon is just giving up on zero-knowledge technology altogether?
Good question. No, not at all, actually.
Okay.
They are absolutely continuing their work in ZK Tech. But it's going to be through a new spin-off entity.
Off.
Yeah, called Polygon ZisK, ZISK. This new unit is going to be specifically focused on leading the research and development in the ZK field.
And who's heading that up?
Jordi Baylina, who is a key figure in Hermes and the original zkEVM tech.
Okay, so the expertise is still there, just in a different structure.
Yeah. Exactly. No launch date announced for ZisK yet, but the commitment to ZK research seems firm. And really crucially for anyone building using Polygon's tools,
Yeah.
the sunset of this specific zkEVM chain will not affect other chains that have been built using Polygon's chain development kit, the CDK.
Oh, that's important. So projects like Immutable.
Exactly. Custom networks like Immutable, which use Polygon's CDK tech for their gaming stuff, they'll continue to operate just fine. Their tech stack isn't affected by this specific zkEVM being phased out.
Okay, that's a vital clarification. So stepping back then, Polygon is cutting loose an underperforming, expensive asset, the zkEVM they acquired. They're refocusing hard on their core POS chain for specific things like payments and RWAs, and on AggLayer for interoperability.
Yep.
This is backed by more centralized foundation leadership under Sandeep Nailwal, strong financials, and continued, albeit restructured, ZK research via ZisK. It's quite the overhaul.
It really is a major realignment.
So what does this all mean for you listening, if you're a developer, an investor, just someone watching the space?
Well, I think this whole situation, this deep dive into Polygon's pivot, it really shows you just how fast things move in tech, especially blockchain. That constant evolution, that need to be adaptable, sometimes brutally so.
Making tough calls.
Making really tough calls. How do companies decide, okay, this massive investment we made, it's not working, we need to pivot? Even if it means writing off hundreds of millions. It's about aligning with where you think the future is, where the market demand actually lies.
And maybe it tells us something about which crypto projects might stick around long term.
Perhaps. That even a huge budget doesn't guarantee success if the market fit or the execution isn't quite right. It feels like a signal, maybe, a move towards more specialized, more utility-focused blockchain solutions, rather than trying to be everything to everyone.
Find your lane and dominate it.
Something like that. It's a testament to needing a clear strategic goal and sometimes having to abandon big bets to pursue it.
So think about that. What stands out to you about this strategic shift from Polygon? It's definitely food for thought. Thanks for joining us on this deep dive into Polygon's big pivot